we have this super big gap that's going down right now in the knee-jerk reaction. As you can see, Apple is gapping up to 611, but the most important thing is on this knee-jerk number on Jobs Friday, July unemployment rate, 83%. Now, we had a big spike in the futures. They were already up 100 handles in the Dow. They shot immediately to 150, and now they're at 132. July non-farm payrolls, I'm going to get more into the number. I'm going to get the numbers broke down. It's 8.3% versus 8.2%. So that side of it went up. And I've got to get down into the categories, which we will, MMTs. And we'll start the day out on a weekly Friday expiration with the monthly jobs thing. So U.S. non-farm payrolls come in up at 163. Private sector is 172,000 versus 73,000 in June. That's a big difference. And the thing about it is now Obama's going to think he's done something, which he hasn't done nothing yet. Why don't you take a look around the world in the U.S.? So what I will say is this is a knee-jerk reaction. We had that big spike. They'd already had this number up. They've had the futures up in anticipation that they could come back and get a number. I'm going to find out more about the report. One thing we do want to tell people about the beginning part of this number, because the futures are kind of coming back down. You have to realize one thing, that these numbers, these monthly unemployment numbers, you're at 8.3%. Labor force participation rate at 63.7%. Now, we'll get down more into these numbers. Our average hourly earnings is 34.5 hours versus 30.5 hours in June. That number had contracted a little bit, but let us not forget that all of these unemployment numbers have been revised down. And I'm going to find out U.S. non-farm payrolls up 163,000 versus 64,000 in June. Now, I'm going to have to get down into the pro and con of this number. However, it's about the initial knee-jerk, which will propel the indexes and stocks right back up into the top end of their resistance channel. Okay? So, non-farm payrolls, 163,000 versus 100,000. Okay? That's what we were expecting. Prior revised to 64K from 80K. July non-farm private payrolls is 172,000 versus 105,000. So, once again, we got all of these numbers that came down. Futures seen a positive initial response to the July unemployment data. Okay? However, it's still at 8.3%, revised down. The most important thing is that the consumer is not being deleveraged in their hourly earnings work week. We will get more involved. Right now, it's about how do I take this opening bell gap off of the monthly jobs report, and how do I put that in my favor, and how do I take stocks at their resistance levels where they would come back down, and how do I trade them off of their support levels, and what would the elevation be? Because for 9 Mondays in a row, we have sold down in the market. This coming Monday would be the 10th one. Okay? So the NASDAQ futures fair value is plus 30.8, which makes that fair value of their futures indexes. That means that it'll, when we get into the opening bell, that when stocks do hit their support level, they're going to be strong on this very Friday morning with the unemployment number. This is your knee-jerk reaction, MMTs. We will now start squaring all of our positions. We will take a look at the upper end of resistance levels, how to trade that opening bell using pre-market futures on a monthly jobs number. How do you put that and turn that into profit? How do you turn this gap open up, turn that into dollar bills in trading profits, which we will do, MMTs.